Thanks for tuning into Talking Point. I'm your host, Niraj Shah. What we're trying to do almost every single day is, aside of having normal market conversations about where the markets are headed, we are trying to get guests to talk about, irrespective of where the markets are headed, because it's so difficult to predict, what, how would, how should an investor approach the whole investing theme currently? What are the pockets which are looking attractive, irrespective of what the market does? And quite coincidentally, our guest today on the show believes that irrespective of what the economy does, there will always be pockets that will do very well. And history has shown us that. Let's get in Pankaj Murarka, CIO of Renaissance Investments, to talk about his thoughts on how he's approaching investing his clients' money in the current scenario. Pankaj, so good having you. Thanks so much for joining in. Are you are you of that belief really that you don't look at what the markets would be doing from a 5 year perspective because you are investing money in the business which will do well irrespective of the markets?
Absolutely, Neeraj. My experience over the years, the lessons I've learned over the years, has really led me to conclusion that irrespective of the underlying economy, there are always businesses which can do far better than the underlying economy, and they can grow despite challenges or headwinds in the economy. And as an investor, as long as you can find those kind of ideas and those kind of businesses, you're fine by investing into those businesses, and those businesses will do well, irrespective of the headwinds or the challenges the economy is facing or would face from time to time. So I think for a long-term investor, it's important to be bottoms up and identify companies which will do well, irrespective of the economic cycles, and that's where the true wealth creation lies in.
Interesting. So, and Pankaj, if I'm not wrong, your current set of not the entire set, but things that you probably like more are all companies which are not necessarily catering to the domestic market as much as they might be catering to the global market. So you're kind of making the world your oyster and not restricting yourself to the 130 billion people of India.
Yeah, that's right. Because the local economy is more challenged, companies which have a global perspective can still grow because, as you rightly said, they are looking at, meaning they are integrated to the global economy. And as a result of which, the universe of customers and the ecosystem that they can target is much bigger than a company which is constrained by the domestic economy. Having said that, I also believe that despite the challenges that the domestic economy is facing, there are enough number of businesses which are doing well within India as well. Probably their growth is coming at the cost of some of their smaller peers because these larger players are growing and eating into lunch of some of the smaller players. But that's how businesses are. So I think, as you rightly said, yeah, global players have a slightly more advantage at this point of time because, as you rightly said, their oyster universe is much bigger, and for them to extract growth or deliver growth becomes much more easier.
Okay. So let's try and identify some of these themes, Pankaj, and try and speak in detail about some of these, right? I mean, I think the first stepping stone that you've told us is that you correlate your investing style to surfing the big waves. So effectively, does it mean that you look for a very large landscape of growth as the starting point?
Absolutely. So, as you know, I relate it to surfing as a sport which I follow. Essentially, the big wave surfers are the ones who actually are not, riding on the smaller waves, but they're always looking forward to and ride on a high tide on the much bigger waves, and they do it, execute it with perfection. Uh, Likewise, in any ecosystem or any economy, despite the challenges it faces, I believe that there are always companies, which, because of the way they are wired and way their business models are being built, meaning we can call them anti-fragile companies, they tend to deliver growth which is far superior, and despite headwinds in the economy. So obviously, our objective as an investor is to identify companies for whom the one potential opportunity or the size of the opportunity is very significant, and they probably are delivering growth even in such challenged times. And probably they're using this downturn or this challenge as an opportunity to make strategic investment into their business, which will aid and accelerate their longer term growth.
Mm. Now, viewers, keep in mind there is a set of investors who will tell you that you should have safety in the price, which is value buying, which effectively, to my mind, hasn't quite worked in the last decade gone by globally. And then there are a set of ideas which will do well because the growth is the value in the stock. And I think one of the themes, Pankaj, that we talk trying to talk about, maybe that nature, right? The everybody's talking about pharma, APIs, etc., etc. You looking at a maybe slight niche in that pharma stroke chemical space, which is the cramps opportunity. Can you tell us a bit about this?
Sure, Neeraj. So I think the whole contract research and manufacturing space is at a very big inflection point from India's point of view. India has unique skill sets in terms of the kind of qualified postgraduates and PhDs that we have or we create every year. Today, as the global pharmaceutical landscape stands, global pharmaceutical companies are extremely challenged in terms of their cost structures, and they are looking to reduce or optimize their research and development costs. And today, if you look at the landscape, skilled, biologist who's a PhD in biology or chemistry would cost $175,000 in something like US. The same person would cost something like $60,000 in Bangalore or Hyderabad. So the same work which is done by this scientist in US can be done in India at about one third of the cost. And as a result of which, global pharma companies are incrementally outsourcing more and more of their research and development work to low cost countries like India. And I think India has a huge tailwind here. I think it's a very long term trend. To my mind, if you ask me, the whole cram space in India today is at a point where the IT industry was, in the mid 90s or 25 years back. So I think given that the economic proposition or the value proposition that's offered to client is so compelling in terms of cost savings, India's cramps industry can deliver, very high growth, maybe high teens or 20% plus for the next 10, 15 years to come. So something what happened in the IT industry over the last 20 years probably is all set to replicate in the cramps industry, I think, over the next 20 years.
Do you get a sense that the industry is that well represented of sorts? I mean, again, you would have a sense of how IT was back then, but we still had some of these notable names doing well enough by then. When I look at the cramps opportunity, and when we were talking about this yesterday as well on the phone, aside of maybe a Syngene, and by the way, standard disclaimer, viewers, that all the any company that is spoken out here is not a recommendation from Pankaj's end. It's merely used as an illustrative example to make you understand. But Pankaj, I'm just coming back to my question: that is there enough representation for the world to take the Indian cramps opportunity seriously? Because I presume that the world took the Indian IT opportunity seriously because there were companies which were showing the metal to be able to deliver what the world wanted.
Yeah, so you're right, Neeraj. In terms of the potential opportunity, probably the pharma R&D opportunity is not as large as the IT opportunity, but yet I think the world is taking note of Indian skill sets and what Indian companies have to offer. And as the growth, accelerates, I think more companies will emerge in the sector. So obviously, as we discussed in the listed space, there is Syngene, which is the largest contract manufacturing company out of India, and there are a handful of companies which today are not listed, but I think they will get listed over the next few years, which is what happened with IT as well. Meaning, as my experience has been, some of these niche sectors, as growth accelerates, it creates its own ecosystem, and there are many more players who eventually come into the industry and build their businesses. And I think something similar will happen in this whole space over the next 10-15 years.
Mm. I think an important point that I wanted you to tell me about, Pankaj, is also your belief about how the life of the new molecules is so low, which will compel some of the global players to shift their research activities to lower cost destinations, isn't it?
Absolutely. So essentially, global pharma companies are faced with significant challenges. On one hand, their R&D cost keeps spiraling every year, and on the other hand, the potential shelf life of a new molecule or a new drug that they discover is reducing because competition is coming much earlier in those molecules. So the exclusivity they get is reducing. So the period over which they can monetize that molecule is reducing. So they are faced with pressures on both sides of the business. On one hand, the costs are rising, and on the other hand, the potential revenue potential of a new molecule is reducing. And as a result of which, they have been forced to, drive more efficiency out of their R&D budgets, and they want to get more output or productivity out of the same dollars that they're spending on research. And the only way that can be done is by outsourcing research to low-cost destinations like India, where you don't compromise on the quality, yet you get things done at a much more cheaper rate. Something similar happened, when IT started as a trend where and cost of a computer engineer in US would be something like 70 to $80,000, and the same person in Bangalore would cost you something like 20 or $25,000, and which is what forced global companies to outsource their IT to India. And I think something similar is happening into the pharma R&D space.
So, Pankaj, my final question on this before we move on to the next theme. It almost seems like you believe that this is a decadal opportunity, and your investments, whatever you may have in this space, would actually be with a 10-year view of sorts. Would these businesses, I mean, what gives you the comfort about the holding period for a business which is, for lack of a better word, nascent in India?
Go back in the history, Neeraj, and look at it. Infosys, when it got IPO, it was a small cap company, and I was an IT analyst. So it's a bellwether, and it's amongst the top 10 largest companies in India. I don't see any reason why some of these companies, which are today small or mid-size, they should not become large over the next 10, 15 years and become some of the leading companies in not only in India, but probably in Asia and the world. Because I think India has the right kind of skill sets in terms of to offer the right kind of services to the customers, and the value proposition that India can offer in terms of the cost savings is extremely powerful, and more importantly extremely sustainable over the next 15, 20 years. Even 20 years out, the cost of computer engineer in India today is lower than that in US, and which is what is driving the whole IT industry. So I don't see that fundamental economic proposition changing. So I think, as you rightly said, yes, the sector is nascent. The companies, the leaders in the sector itself are companies which are mid-cap. But I think as the sector grows, some of these companies will become some of the leading companies of India in the next 10, 15 years.
That should be interesting. Pankaj, may I ask you tongue in cheek, did you foresee the IT opportunity back then, or did it come in hindsight of sorts?
Obviously, that was early years for me, Neeraj. If I had spotted it at that point of time, I would not have been talking to you today.
No, no, I'm sure you would have been talking to me today as well in whichever shape and form, because I know you've done very well for yourself. But which brings me to my next question, Pankaj, which is IT, right? And how do you play the technology or the tech theme of sorts? I mean, because Indian IT, I mean, or in Indian shores, everybody kind of resigns to IT as being the service providing companies. Is that the way you would play, or do you believe that the internet economy is kind of opening up and therefore it's throwing up newer slash better opportunities than Indian IT service providers?
Absolutely. So the Indian IT companies now, if you look at the leading companies, they are very large companies, not only by Indian standards, but by even by global standards.
Right.
Meaning the top five Indian IT companies are amongst the top 10 service providers globally, and they have operations across the world, and they compete with some of the largest companies globally, including the likes of IBM and Accenture. And some of the Indian companies are now, probably some point of time in the future might overtake them in terms of size and scale as well. So I think the IT story in India has played out beautifully well over the last 25 years, and these companies are now very large companies, and because of their size and scale, obviously their growth rate has moderated to high single digits versus the 20-30% they used to do 10 years back, and probably 50-60% they did 20 years back. But I think as economies evolve, I think now we've reached a point in time where probably the internet companies are again at the same point, same cycle or point where the IT companies used to be 20 years back. One thing, if at all, this pandemic has done is it has made all of us aware that we are using more technology in our daily lives than we were using before the pandemic. And with the onslaught of Geo in terms of what they've done in the telecom market in terms of pricing, we have all of a sudden we have seen in the last 3 years smartphone penetration in India has actually doubled. So we've gone from about 400 odd million smartphone users to over 800 million smartphone users. And India's data consumption has gone 5x during that point of time, from about 2 GB to something 11 GB per customer. So I think there is tremendous opportunity for this internet economy. India's internet economy is still very small, very nascent, but the way smartphone penetration has happened, internet economy is going to grow exponentially over the next 15, 20 years. So companies which have their business model in and around internet economy, I think some of these companies will really have a J-curve growth over the next 15, 20 years.
So, can I ask you if you would believe, and again, I'm not asking you to necessarily make a choice of one over the other, but because a portfolio can have a very high growth company and a medium growth company as well. So maybe IT services and the internet gig economy, or the app economy, or the app stock could also be there. But would you believe that if you had to make a choice between the two, you would prefer not necessarily the IT service provider, but I mean, the 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 tech companies. There are three or four handful of them out right now, and they are all expensive, but we still prefer them.
Absolutely, Neeraj. As investors, we generally tend to be growth biased investors, so we chase growth and we chase growth aggressively, and we are happy to pay a price or a valuation for that. Don't forget, if you go back to the heydays of '97 to 2000, all the IT companies, be it Infosys and some of the other companies, including Wipro and HCL Tech, they used to trade at multiples which varied between 50 to 100 times the earnings, because at that point of time they were growing at 70-80%. So I think internet businesses are very nascent at this point of time. Their growth curve will be very, very high in times to come. We have really seen what has happened in US. Just think about it. I'll give an example. Zoom, the video app, which most of us, all of us use most of the time these days, it's a 10-year-old company. And the market cap of Zoom today is higher than that of IBM, which is 110-year-old company. So that's internet for you in terms of what it can do. And the power of internet is such that the growth curve can be really exponential, and which is what we are looking forward to. You're right that there are only a handful of listed companies at this point of time, but I think over the next 10 years we'll have many more internet companies which will come to capital markets to raise capital.
Yeah, no. So Pankaj, my final question on this theme is that are you invested in the currently listed names, or are you looking out for newer opportunities and keeping some gunpowder there? Because I can think of, I mean, for example, Reliance Industries is right up there, front and center on everybody's mind when it comes to internet, right? And then what? There is yes, there is Zomato and InfoEdge, etc. But aside of that, there are not too many pure play internet app based or otherwise opportunities, right? So are you waiting for the right opportunity, or do you believe the current state of companies, as well expensive as they may be, still provide you an opportunity?
So we invested in some of these names, Neeraj, that you said. You're right that apart from that, there are only other handful of other listed companies. We can count them on fingers. There is a B2B marketplace, which is IndiaMart. There is a company which is into advertising and technology, which is Affle, which got listed early this year. There is, and there are a handful of other companies. So the universe today is small, but I think more importantly, see, I'm seeing a lot of businesses being incubated in the internet space, and a lot of these businesses are achieving critical mass at a very rapid pace. So I think it's just a matter of time before a lot of these businesses they visit or they approach capital markets for their fundraising. So I think over the next 5 or 7 years, this universe will become really large.
Got it. Pankaj, one offbeat question, not quite in the same field, but connected. We had two very large, not two mid-sized IPOs, but very large listings of sorts, right? In Happiest Minds and Root Mobile, and slightly differentiated models to my mind, as I thought, because the Happiest Minds went out and said that we are not a traditional IT services company because we are 96% digital, so we are effectively a digital company. And Root Mobile is saying that we are almost a company which is not like what the US company is, but in a similar vein and shape. and the growth rates could be 35 odd percent for the next few years. My question to you is, do you reckon that the market will give very high multiples to these stories, as we call them, because they are interesting stories for sure.
Absolutely. So, Happiest Mind, their business model is while they are still an IT services company, but they're, as you rightly said, 96% of their clients are clients who are digital companies. So, effectively, they believe that if digital companies are going to have exponential growth curve, then they'll come back and invest more and more in technology. And that is where the opportunity or the growth curve for Happiest Minds could be much bigger than the traditional IT services company. And I think that can happen because if you go back in history, then India's IT services company had one of the biggest growth curve during the time of Y2K in 99, in 97 to 2000 period. So probably Happiest Mind today is driving the trend of digital, and which is where they are focused on. So I think they can have a growth curve or a trajectory which can be much higher than the traditional IT services company. And likewise for Root, I think they've built a unique business model where they, deal with telecom companies, and they're helping telecom companies to reach out to their customers and facilitate a lot of transactions and commerce. So I think again, probably they can do well over a longer period of time. While I'm extremely bullish on technology and internet economy of India, one thing as a word of caution, Neeraj, is what also happens is in spaces which are evolving so fast, there are a lot of business models which don't work and which go broke. It happened in IT services in India as well, where a lot of companies succeeded, but there were equal number of companies which failed. So I'm not saying that all internet companies will succeed. I'm sure out of so many businesses out there, there will be failures as well. So investors needs to be very selective and do their homework before they invest into internet companies and select the right ones with the right business models.
Okay, Pankaj, thanks for that word of caution as well. But it's important to kind of keep these things in mind. But the management just sounded so confident. Anyways, but okay, getting back to track, and let's move on from what is quote unquote sexy to what has been the Achilles heel of sorts for India, Pankaj, which is Indian manufacturing. It's interesting that you are betting on it, because I've heard a couple of other peers of yours as well saying that the next decade could be India's moment in manufacturing. Do you believe the same? If so, why? And how do you reckon investors can play this?
Absolutely. I think we have a very huge opportunity on our hand, Neeraj, because today the world, one thing the pandemic and this whole COVID crisis has done is it has led to a reset in geopolitical equations globally. The world is wary of China and China's prowess, and they need an alternate to China. And probably, I think that is where India can step in. We are adding about 10 million people to our working age population every year, and this trend will continue for the next 20 years. Effectively, we will be supplying 200 million people. Or adding 200 million people to a working age population over the next 20 years. We will be the largest supplier of labor to the world. It's important that we harness these skills and really make the best use of it. If you look at it, India's exports today are languishing, and our contribution to global exports or global trade is minuscule at 1.7%. In some of, if you look at some of the very smaller economies like Canada, Mexico, they have a much higher share of global trade than what India has. So I think that it's very high time that the world need India, because the world is looking for an alternate to China, and India needs to step up its game and probably help the world, de-link from China or diversify the supply base. You look at India's exports at about 300 odd billion dollars. It's minuscule and it's been almost stagnant now for the last 5 years. Some of the smaller economies they have, if you see the Asian miracle in terms of what Thailand, Vietnam, Korea, Japan has achieved, meaning they build their entire economy and growth and prosperity over a 20-30 year period by just focusing on exports, and they have 25, 30, 40% of their economy which comes out of export economy. So I think it's high time that we, in India, we step up our game and really scale our manufacturing and provide an alternate to the world.
Okay, Pankaj. So there are companies which are, I mean, looking like being world leaders. I mean, one of the most talked about manufacturing stock of sorts in the last 1 month has been GMM Fodler, and that company's gone out and bought out the global leader. So we are actually now seeing a manufacturing company of sorts, even in a small niche, becoming world leader of sorts. My question though to you is that do you reckon that there will be new age companies which will come up and take center stage, or some of the established companies which hitherto didn't have an opportunity, but because of the China plus one sentiment prevalent in the world, but actually get their fair share of business or get their share of businesses and might be able to do well? How are you kind of approaching investing here?
So I think we are positive on manufacturing. I think it will be as it plays out. It will be a mix of both, as meaning both high tech manufacturing and low end manufacturing will move to India, because any global company looking to set up a manufacturing base, if you look at it from their perspective, they don't have a choice other than India, because we have the least cost of labor, and with the tax changes which the government of India did last year, now we also have the lowest tax rate on new manufacturing setup at 15% in India. And on top of that, now the government has got a policy making right by providing incentives through the PLI or the production linked incentive scheme. So I think global companies, I think they have no better alternative than India when they're looking to diversify their supply chain and their manufacturing base out of China. So I think it will be both niche manufacturing, which is high tech manufacturing, and mass scale manufacturing. Just to give you an example, when you look at Samsung, in 2006, Samsung decided they need to build a second manufacturing base outside of Korea, and they went to Vietnam. And over the next 7 years, Samsung, one single Samsung, invested $17 billion of FDI into Vietnam. Now, just think about it: five or six such global companies coming to India and investing 15-20 billion dollars. These five six companies by themselves can bring something like $100 billion of FDI into India over the next 5 to 10 years. And that can really change the shape of Indian economy.
Interesting. Okay. Last question, Pankaj. Are you betting on? Okay. Now my question is: are you betting on size, or are you very very bottoms up here? Because there are a few companies, like we said, which are irrespective of the size, are doing some very niche work and might be doing extremely well. So when you're choosing companies here, are you betting on size and therefore the established players which might get advantages of scale, or that is not important?
No, size is important, needed, especially when it comes to manufacturing, because manufacturing is all about large scale, least cost production. But at the same time, we're also looking at certain competitive edge. So we're looking at a mix of the two. And I think the opportunities are across the board. Many of you have seen some initial initiatives in electronic manufacturing, starting with mobile phones. We're seeing some initiatives on the chemical side. We're seeing some initiatives on the pharmaceutical side with the APIs and so on. I think eventually, if you want to move to cleaner energy, then probably we'll have to take initiatives to encourage setting up of battery manufacturing facilities and also solar modules in India. So I think the whole manufacturing spectrum, right from assembling mobile phones to building a fab or a chip, all of that, the whole manufacturing ecosystem has to evolve. And I'm pretty sanguine that all of this will happen in India over the next 10 years. India will become the next manufacturing powerhouse to take on China, and probably which the world wants India to become that.
Let's wait and watch how it shapes up. But Pankaj, it was interesting to get an investor's view on how to kind of think about all of these opportunities, and I thank you for that. Thanks for joining in today and giving us your insights. All right. That's that's Pankaj Murarka. Thanks for joining in today, and viewers, thanks for tuning into this edition of Talking Point. I hope by this conversation it gets you thinking about some opportunities that may be there. Please do your own due diligence before you go out and try and think about where you want to invest. But we, via these shows, are trying to get those brain cells active. Thanks so much for tuning in today.